Welcome back to Yahoo Finance Live. We are joined now by Nouriel Roubini, NYU professor of economics at NYU's Stern. Nouriel, always great to have you on. I'd like to share some breaking news that's just coming across. We're getting some headlines that President Trump has defied Congress and has vetoed the bipartisan defense policy bill. In some comments, Trump called the defense policy bill a, quote, gift to China and Russia. And of course, I know you're someone who does look at geopolitical events, and we are shaping up for a new administration in 2021. Your reaction to this news that's just crossing?
Well, the president is becoming unhinged on everything. He's literally trying to do a military coup, following the advice of Mike Flynn and others, in order to subvert the results of the election. He doesn't want to pass this stimulus bill, and if he doesn't, we may end up in a government shutdown. And now he's accusing the defense bill of things that don't make any sense. He has even denied that this major hack attack came from Russia. He claims that it came from China without any base. And if there's anything that actually can help us to push back against our strategic rivals, whether Russia or China or North Korea or Iran, is going to be this defense bill. So literally, the guy is becoming completely unhinged across the board. It's just politics. Maybe he's trying to prepare himself to run again in 2024. Maybe he's losing his marbles. I don't know what's going on. But pretty much everything he's doing, it doesn't make any sense.
I would like to shift the conversation, and thank you so much for sharing your thoughts on that, to cryptocurrency, of course, Bitcoin. I think the last time we had you on, you got quite a bit of attention. I'm just looking at Bitcoin's price now. It's above 23,500. And you put out a tweet that the Bitcoin has no place in an institutional investor or retail investor's portfolio, yet we continue to see big name institutional investors kind of flood the space. Paul Tudor Jones, for example, and then you're also even Anthony Scaramucci, and then we're also seeing, the retail investors. Why does it not deserve a place in a portfolio?
First of all, calling it a currency is not a currency. It's not the unit of count. It's not the means of payment. It's not a single numeraire. It's not a stable store of value. Secondly, it's not even an asset. Either an asset has both income, use, and capital gain, like bonds, like stocks, like real estate, or like in case of precious metals, they don't give you an income, but gold gives you industrial use, it gives you utility as jewelry, and as a capital gain. While in the case of Bitcoin, there is no income, there is no use, there is no utility. The only thing is a speculative, self-fulfilling kind of rise. And that rise is driven totally by manipulation. There have been academic study suggesting that this pseudo stable coin, Tether, is being created by fiat. This year alone, the increase in the supply of Tether has been another 16 billion out of the initial 4, so it's 20. And every time the price of Bitcoin goes down, literally overnight they issue more of this Tether that is used literally to manipulate the price of Bitcoin. So the price of Bitcoin is totally manipulated by a bunch of people, by a bunch of whales, doesn't have any fundamental value. And like in 2017, when it went from 1,000 to 2,000, and then in 18 it crashed from 20,000 down to 3,000, I think we're close to the point in which this hyperbolic bubble is going to go bust. And it's going to go bust because law enforcement authority are having an investigation of Tether and of the company behind it. And in my view, like in the case of BitMEX, that was the biggest scam and criminal derivative cryptocurrency house, has been indicted. You can have an indictment also of those who are behind Tether. When that's occurring in the next few months, there'll be a crash of Bitcoin and all the other cryptocurrencies. They're not even currencies, they are shit coins.
Nouriel, I want to break this down in several parts because I think a lot of investors with Bitcoin at over $23,500 today need to pay attention. Why would there be, I'll call it a contagion, if the feds crack down on that other crypto to Bitcoin? And how do you look at the fact that central banks worldwide are looking at creating digital currencies? Are they different than what we see with the Bitcoins and the other cryptocurrencies already out there?
Well, there are several academic studies, including one by University of Texas, that show that every time the Bitcoin prices were weakening, there was an issuance of this Tether. It's literally a stable coin created out of fiat. There's been no audit that this cryptocurrency is backed by any assets, and it's just printed by fiat used to buy Bitcoin. So it's actually total price manipulation. There's plenty of evidence that there are other schemes of manipulating cryptocurrencies. There is pump and dump schemes, hundreds of channels on Telegram or on WhatsApp. There is front running, there is wash trading. Pretty much anything is being done for penny stock is done for crypto and Bitcoin to the power of 10. That's a totally manipulated market. It's not driven by fundamental, it's driven by insiders, by criminal, by whales, by scammers. That's the reality, and there is evidence on it. And that's why there are criminal investigations that are going to reach their climax in the next few months. Secondly, central banks are going to introduce digital currencies. But first of all, these digital currencies that will have nothing to do with crypto or blockchain. Today, every private commercial bank has a bank account with the Fed. We, as individual or non-corporate or corporation or not financial, we don't have access to the balance sheet of the Fed. Suppose that tomorrow we have access to the balance sheet of the Fed. That's what a central bank digital currency means. It's not digital money. Digital money already has existed for decades. We have bank accounts, we have wire transfers, we have Alipay, we have WeChat Pay, we have Venmo, we have all sorts of other digital payment systems. So what's new is not that it's going to be digital. There are thousands of digital payment systems that work all over the world, is that we don't have a situation where individuals like you and me have access to the balance sheet of the Fed. Once we do, we don't need to have a bank deposit for making cheap, fast, instantaneous transactions that are payment systems that are cleared and settled instantaneously. So once we have a central bank digital currency, not only crypto, that is junk, is shit coins that don't have any payment use, but even other digital payment systems like bank deposit or Venmo and PayPal are going to be dominated by central bank digital currency. And this scheme technologically has nothing to do with crypto, has nothing to do with blockchain. It's going to be centralized, it's going to be permissioned, it's going to be a system that's going to be private, not on a public decentralized ledger. So calling it crypto is not true. It's a central bank digital currency. It's going to revolutionize payment system, but it's going to destroy any pseudo cryptocurrency that is not a cryptocurrency and is not a currency. So people don't know what they're talking about when they're talking about central bank digital currency. They get excited, they say even central banks are going to crypto. Just the opposite. They don't know what they're talking about.
Nouriel Roubini, professor of economics at NYU's Stern and CEO of Roubini Macro Associates. Always a pleasure to have you on. Wish you a happy holiday season, and thank you again.